Now by this point, it's pretty clear that I'm a huge fan of the Schwab US Dividend Equity ETF. I talk about SCHD pretty frequently throughout my channel, and I even shared with you guys earlier this year that I specifically have a plan to build up my SCHD position, which is currently at around 530 some shares, to a point to where overall throughout all my portfolios, I'll have over 1,000 shares of SCHD by the end of this year. And even though for me specifically, because I am more of an income cash flow focused investor that's trying to build out a dividend growth portfolio that pays me a large amount of dividends on a consistent basis, what about the investors out there that might be watching this video that aren't necessarily as concerned about dividend income day one, but want to invest into a dividend growth ETF that offers a lot of growth potential on top of course, dividend income and dividend growth? Well, in this video, we're going to talk about what might be one of the best, highest quality dividend growth ETFs across the entire market. That specifically is not the SCHD ETF. Now, if you consider yourself a dividend growth investor that's always on the hunt for some super high quality assets, make sure to stick around, drop a like down below, and let's get right into this ETF. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earn more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, I'm sure some of you probably already guessed it, but the ETF we're going to be talking about and covering, looking into in this video is ticker symbol VIG, or the Vanguard Dividend Appreciation ETF. Now, this ETF came across my radar a while ago, and although this ETF doesn't have as high of a starting dividend yield of that compared to something like SCHD or Devo, this ETF has a lot of massive growth characteristics because of the holding breakdown, which we're going to go over here in a second. And like I sort of mentioned earlier on in the intro, if you are a dividend growth investor that wants to earn cash flow consistently, but doesn't necessarily care about earning a ton of dividends from day one, and maybe you favor total return or just overall net worth long term, VIG is definitely going to be a great option. Now, right here on the Vanguard website, which is the provider of VIG, it says product summary seeks to track the performance of the S&P US Dividend Grower Index, passively managed full replication approach, remains fully invested, etc., etc. Now, instantly, I love the fact that VIG has a very cheap expense ratio of just 0.06%. I am a huge fan of DGRW, and DGRW honestly is probably up there right next to VIG, in my humble opinion, as one of the best, highest quality dividend growth ETFs across the entire market. But VIG does have a much cheaper expense ratio of that, and that's because DGRW has a 0.28% expense ratio, where VIG is dirt cheap at 0.06%, which is pretty much what you're going to find a lot of times when it comes to Vanguard ETFs. Now, I mentioned a little bit earlier ago that even though VIG does have a basket of stocks that do pay dividends and also has some significant dividend growth, VIG has performed very well and outperformed a lot of the other dividend growth ETFs as far as total return goes, because this ETF has grown so much over the past 18 or so years. And just for some perspective on that, around 2010, VIG was trading around the $50 range, where as of right now, it's at $174. And keep in mind, this is not by any means a growth ETF. This ETF pays a decent amount of dividends also. So pretty much over any time frame that you look at VIG, you're going to see that it's pretty much green on every single time frame, because this ETF is traded up and to the right pretty consistently, and just as of recently trading at all-time highs. Now, the reason VIG has performed so well and has grown so fast is of course due to the holding breakdown, and specifically even the top 10 holdings, which make up around 31% of the overall ETF. But this ETF has a lot of exposure to technology, but not too much exposure, so 23% gives a dividend growth investor a lot of exposure to have some growth upside potential, but again, not too much technology exposure, meaning that the ETF is still going to be relatively low beta compared to some of the other growth ETFs out there. The top 5 in the breakdown are technology, financial, healthcare, industrials. Then VIG has a smaller portion of consumer cyclical, basic material, energy, utilities, and communication. Now, depending on what type of investor you are and what you sort of are trying to solve for, if you are investing into ETFs, I think it's very important to look through the holding breakdown and see exactly what type of exposure you're getting from different sectors. And of course, maybe even more importantly, see what the top 10 holdings are when it comes to the ETF. So for VIG, for example, we have 5.3% Microsoft and 4.4% Apple. So this ETF is about 10% overall, just made up of Apple and Microsoft if you add the two together, which I definitely like because I'm bullish on both these stocks. I do own both these stocks even individually throughout my portfolios. The rest of the top 10 holdings is also very solid in my opinion. We have JP Morgan, we have United Health Group, we got Broadcom, ExxonMobil, Visa, Johnson & Johnson, MasterCard, Home Depot, and others. VIG is also super diversified, 318 holdings, which I also like, being sort of a risk-averse investor. Now next, looking into VIG's dividend growth, the dividend history, etc. The trailing 12-month dividend yield is around 1.4%. Now side note, VIG was offering a much larger dividend, of course, sometime last year when this ETF was down substantially in price along with the rest of the markets. But as of right now, which trading at all-time highs, you're not going to get the most cash flow from day one because again, this ETF is relatively expensive, although historically it just seems to keep going up. But the great thing about VIG is that even if you are going to get a dividend starting at, let's say, 1.4, 1.5% right now, the dividend growth is definitely there, which means this ETF has consistently paid investors more and more, historically at least, and most likely will continue to do so unless something drastically changes. For some perspective, back in 2014, around 10 years ago, this ETF was paying around 40 cents, 33 cents per share per quarter, and as of the last few quarters, we're talking 77, 87, and even 92 cents per share, which is about 3 times as much in dividends that was paid to investors around 10 years ago. And it's also important to note that just as of recently, VIG paid the biggest dividend of all time at 92 cents per share. The 12-month prior dividend was 87 cents, indicating substantial dividend growth, which investors of VIG absolutely love. Now, what that also means is that even if you lock in, say, a 1.4% starting dividend yield, for example, if you're getting paid 3 times more in 10 years, that means your yield on cost could be anywhere from around 4 to 5%, which is massive considering this ETF is known for growth characteristics along with paying cash flow to investors through dividends. So now that we looked at VIG's price return, we talked about the holdings, the dividends, and the fact that this ETF could be a perfect option for those dividend growth investors that want a little bit more exposure to growth rather than income from day one. I thought it'd also be interesting to see if we were to have invested $10,000, for example, into ticker symbol VIG, and this is back in 2004, so more or less around 20 years ago. A $10,000 investment over the last 20 years into VIG would have returned an investor around 2,847%, or a $10,000 investment would have turned into almost $300,000, and that's of course if an investor reinvested dividends along the way. Now that gives VIG an annual total return average of around 18.33%, which once again just showcases how good this ETF has performed long term. Now, like I sort of mentioned towards the beginning of this video, that personally for me at least, I'm currently building out a massive position, or at least massive relative to me, of SCHD, the Schwab US Dividend Equity ETF, because SCHD does offer a little bit more cash flow from day one. And this is because as a 31-year-old dividend growth investor, I'm planning on hopefully using some of my dividend income for bills, travel, or other things in the next, say, 3, 5, 6, 7, 8 years. But later on down the road, if there are good market opportunities to buy into names like VIG and some of the other high quality dividend growth ETFs that do offer some more growth potential because of the holding breakdown, I will definitely be adding something like VIG to my portfolio as well in the future. But when it comes to the Vanguard Dividend Appreciation Index, VIG, I want to hear from you guys now down below. Do you currently have any shares of VIG across your portfolios as it sits currently? And if not, what is your top position throughout all your portfolios when it comes to dividend growth ETFs? If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.